All right, I think I've got a question here coming up. Give me a second. Okay. Hi, Vitautas. Very good evening to you. Brilliant. Malaysia, it's not bad. It's about 12 sharp at the moment in the morning. And thank you, Fausto. Good evening to you as well. It's not bad. It's been raining a lot, you know. It's in the monsoon season, so loads of heavy rain with big blobs of rain. So it's been tough moving around a lot in the afternoon, but it's pleasant in a way, you know. Sometimes it cools it down a little bit. So yeah, it's nice. It clears the clouds away because we do get a lot of haze in Malaysia, so the rain would clear the clouds away. So that's a good thing. Not really hot this time of the year. No, in Malaysia this time of the year, it's you know, we still get that 30 degrees, but it's more humidity more than anything else. Not 30 degrees, maybe below 30 degrees, sorry, but 27, 28 degrees or so, maybe lower at certain parts of Malaysia, depending on the amount of rain. So no, it's quite nice actually. Yeah, that's good. Have you any one of you guys been to Malaysia at all? Yes, it's a all year through weather. So no four seasons here. Don't get cold, just get more rainy months towards the monsoon from November, end of October, November onwards, going to January, December, January, you get more rain. So it's cooler, you know, but not really no winter or anything like that. No, it's just more rain, some months with more rain and some months with less rain but stronger sun. That's it. Okay. Oh, that's good. Yes, you should. I'm from the east side of Malaysia, Borneo, from the island of Borneo, actually. So you got East and West Malaysia. I come from the jungle side, as they say. So yeah, if you do come to Malaysia, I would urge you to or recommend you to go to both east and west. You know, it's nice. Give me a second. Excuse me, guys. I'm just going to switch off the alarm or something like that that's actually going off. Give me a second. All right, I'm back. Brilliant. Okay, I've got a couple of more people, so let's give it another minute, 1 minute, and we'll just get a crack on. Okay. Meantime, any questions, like I mentioned before, simply pop it into the chat box. Okay. And while I'm doing the analysis and all that, I would prefer for the questions to come at the end. If you've got anything in the middle of my presentation, we'll attend to it at the end of the seminar. But for now, since we've not begun, if you've got questions, feel free. Okay. All right. All right. Meantime, While waiting, if you guys got just thought of it just now, if you guys got the how do you call that, pairs that you're looking at, simply type it in advance, pairs that you're expecting for me to cover. You could simply pop it into the chat box, so I'm aware of the pairs that you're looking at, whether it's for this week or for the future. Okay, we're looking at still very low liquidity level market, high on the risk side of things. Okay, but there are opportunities, but we've just got to be a bit wary with how we approach the market at the moment. Yes, I think I've got some questions coming up. Okay, brilliant, Vitautas. Thank you very much. Okay, got some majors there. Okay, very good. Anybody on gold at all? Looking at any opportunities in gold or oil? Whoever's interested in that. So it's mainly the majors I see at the moment. That's good. Okay. Yeah, it's probably the safest oil as well, Vitautas. Okay, yeah, we'll take a look. Not a problem. Okay, yep, sure. We'll take a look at that as well. DJIA. Yes, risky times. Best. I'm looking at quite a number of traders, including myself, onto the majors, and we'll check it on the rest as well. Okay. Yes, brilliant. Sure, Fausto. Okay, I think we can actually start. Let's start. 1 minute's up. Okay, let's take a look. So I'd like to wish everyone a very good evening. It's 12 a.m. here in Malaysia. I'm here in Malaysia in Johor Bahru, south of Malaysia. It's the border between Malaysia and Singapore. So welcome to today's weekly geometric trading analysis session. We'll just jump straight into the charts at the moment because there are a couple of um, patterns that I've spotted, but for some, it's more like a follow through on patterns as of last week. Okay, so what you're looking at the moment is the Euro USD on a hour 4 chart. But of course, if you were to go into lower time frames, you could still see the pattern, perhaps in a different from a different angle, according to a shorter time frame, would give you different results as well, different levels as usual. I think I've got excuse me, a hand up here. Give me a second. Okay. All right. So for those who've attended last week, we were looking at Euro USD's ABCD pattern. As you have seen, we were expecting for it. I guess some of you may have traded it from C to D. Of course, not exactly at the top of C, because we're expecting C moving downwards to D because of this ABCD pattern that is moving downwards. So we're expecting C to move towards D. Okay, but the ideal entry point was way in that level that's marked by the rate horizontal line at 1.0639 or 40 more or less. So we're expecting prices to fall. It did, depreciated in value quite a bit. So it started to correct itself now. Of course, a lot of you would be asking, so what's the plan with Euro USD at the moment? Whether it's going to go down further, will it touch that red line? Who knows? But from a geometric trading perspective, it is still expected for it to head further down, since we're looking at sentiments, very much driven by fear, combination of fear and uncertainty. And if you've got more fear plus uncertainty as well, then you would end up having fear over empowering the sentiments of the market at the moment, is what we can see reflected by the pattern. And on top of that, as you could see, I've applied again the three moving averages, exponential moving averages, 30, the 50, the 100 and 200 right there, and you can see that prices are still moving below all three lines. Okay, so if I were to go back into a shorter time frame like the hourly chart, for example, you could see that it did prices did try to that's as much as the price have appreciated as far as you can see. And the hint for that is that, we've got candles here touching and trying to pierce through the 200 moving average, and it looked like there's a lot of resistance. As you can see, the candles has got wicks, higher wicks there. They are potential signals of the uptrend weakening as well. Okay, so you could see how, if I were to zoom in as well, if you're looking at the behavior of candles itself, that's not a good view. You could see that, you've got longish candles, but as we progress there, you've got candles, what do you call that, decreasing its length there. We've got a lot of struggles, a lot of long wicks as well. So it's giving you an idea, giving you some hints that there are resistance in various angle, but it's just tried to pierce through 200, but 200 is quite a heavy moving average right there. Okay, and this is what we're looking at. So that is the short-term time frame. Overall, if we were to just zoom out like that, as you could see, it's trying to, but it's sort of got stuck right there. Okay, at the moment. Geometrically, what we can also do, in terms of trend line, is to extend that line there from A to B. Give me a second. So that's your A right there, right? Okay. Now that's your A right there, A to C. If I were to draw the lines from A to C again, make sure I match it there. I could literally just not mirror, but draw a line on top, but not come out of that A to C, So if I were to just extend, imagine that A to C just extended itself. That's the sort of trend line, and you can see that that trend line is quite a nice trend line in a way, because see how it touches the body and not just onto the high price wick. That's a good trend line usually. But of course, if we were to adjust it, you can adjust it lower as well to give you a bit of an idea of how much it has crossed upwards. Okay, if we were to go to medium term and look at it from that angle, we can always zoom in a little bit. Second, right? You could see that in the medium term, the strength is still predominantly the bears, okay? Because it's in the early days, it's just resisting at the 50 moving average. It's not gone past through here, the 100 or touching the 200, because that's what you got in the 1 hour chart, but it wasn't the case in the 4 hour chart. Okay, so we're looking at the daily now, and then we'll make a bit of a summary. Give me a second. Okay, just excuse me 1 minute, guys. I think I've got my alarm ringing again. Not sure why. Give me a second. Okay, I'm back. All right, so as we can see right there, I'm putting that view there so you could hope it's clear for you guys. As you can see on the longer time frame, the candles are moving not only downwards, you've got a clear separation between these three lines that are moving downwards. The three moving averages are moving apart from each other, but moving downwards. It's a good sign of bears dominating. You've got all the candles, as you could see, the whole movement of candles are also predominantly downtrend longish candles. So you've got a lot of strength. Look at that candle there. Then you've got more longer ones, okay? And then it went up. Once it tried to appreciate or go up, it's not that convincing with candles, number of candles and the strength of a candle. You've got more bears looking like it's dominating the whole scene there for the daily chart. So what we're doing is that we're making some conclusions just for the euro at the moment, that it's more on the down side. With the 1 hour chart, it's correcting as well. Okay, and then from medium to daily chart, still the bears are dominating. Okay, I think I've got some questions coming up. All right, we're looking at gold. ABCD patterns are related with, there are some connection with the ABC pattern with within the Elliott wave. You know, I'm not an Elliottian myself, but within the basic principles or principles of Elliott wave, you've got waves, okay, in within a trend, and these waves have got a mixture of not only ABCD pattern, you've also got harmonic pattern in there, the M's and the W's and all that. So to answer your question, yes, it may form part of the wave, the whole wave, but in that wave, it could be traded or using the strategy of Elliott wave. But then you've got ABC patterns, you've got harmonic, you've got crab and everything else. But it it depends on your strategy, and it uses Fibonacci to help you decide, what sort of pattern uh, it could actually potentially be. Okay. Yes, I do look at fundamentals, but my fundamentals mainly is give me a hint to confirm the direction, whether or not my TP level would be reached or not could depend on the fundamental geopolitical factor, whether it's going to my direction. I mean, the more, as you know, impact from the fundamental gives more push for it. So I would then decide whether to increase lot sizes, of course, or measure the risk properly. But yes, I do factor in fundamentals. But for me, fundamentals has got a lot to do with geopolitical factors as well. Okay. All right. So that's more on the euro side of it. I mean, a lot of you maybe are you guys trading the euro on still on in progress of the trades at the moment for euro, or are you looking at other pairs? I mean, actively trading, having your trades open for other pairs. We're looking uh, at the Euro JPY at the moment. I would like some pairs I've not analyzed it way before so that I can analyze it right there so you could see how I draw the pattern straight away. Okay. Not necessarily something I look at as good opportunities, but I would like to draw these patterns if I can. Okay, you're in the EU trade vitality. Okay, and that would be the direction from C to D, I would guess. Yeah. Okay, that's good. There's still potential of it. I mean, loads of bank reports from Citibank and Barclays as well, favoring the downside. Um, they've got quite a big uh, how do you call that? A big drag downwards by the pair. That's what's been expected by majority of hedge funds as well. Okay, it looks that way from the movement of candles and all that. So I think there are chances for it to reach the rate horizontal line. Let's take a look. The other thing as well is I just want to go back to the Euro USD. Sometimes not all the time, but there is a way to gauge on when roughly your target could be reached, or when you would expect prices to actually reach that point there. If you were to trade with how do you call that, geometric patterns, and let's say, for example, you are expecting price to be traveling from C to D. Okay, right here, that's your C there. Okay. Oh, give me a second. Oh, 1 second. I was just trying to use the ellipse here. Now, this is quite a good tool to use as well, the ellipse. Yeah, a lot of people don't actually use this tool, but I would like to show you a little bit on another way of which you could look at predicting the D point, but I want to also show you how you could look at by when the D point could be reached. Now, one way to do that, to know of by when D point could reach, is just to have your vertical line being drawn at the very end here. Now, of course, in the middle of the trade of trading CAD, that could give you a bit of an indication of how long it might take. But of course, like this one here, it obviously took longer, but it gives you a little bit of an idea. But there are times that they happen quite accurately, at times not. But I guess there's other factors to be considered, because this would be totally technical. But again, as mentioned, you need to factor in what's happening in the market from the fundamental and geopolitical factor as well. Okay, so I just would like to show you a new tool that you could use to predict C to D. Okay, and that's called the ellipse. Right here, if I go to insert, it comes under shape. Okay, and then you've got ellipse, right? I'll draw it first, and then I will how do you call that, explain to you how I did that. Okay, you need to go into object list, have a tick on there, and only then you can expand it like that. Okay, what you want to do is to start from point A. Okay, you see that 4 dots that you could see, one on the outer end of that egg shape or ellipse pattern that we see, or ellipse tool, sorry. So you got 1, 2, 3, 4, 4 dots there, right? So the middle one allows you to move it, okay? The outer one allows you to adjust its shape. So what you would need to do is simply to go into A, all right? Drag it all the way down to D, but you want this B and C angle to be touched as well. That means this whole diamond shape or kite shape should be inside, okay, there, right? So once you've adjusted that very nicely, okay, you do it as best as you can. There's no um, perfectionism in this thing. So that's just an idea, because it's just a probability. So what that shows us is that the curved area, okay, this curved area here, the end of this curved area could be another potential TP point there. All right. So that's another way where I use the ellipse sometimes just to have more horizontal rate lines as my TP level, okay, or my PRZ. PRZ stands for potential reversal zone. So the horizontal lines that I draw that marks my TP point, whether it is my first TP, second or third, it may be added on with more horizontal lines, and all these lines together would make, if I happen to have more lines, let's say more than 2 of these horizontal lines, then or even now, it could be your zone that in within this range of these 2 lines are my reversal zone as well. Okay, we could see that you see this candle, last candle there, showing a very long wick there. You've got the bulls looking a bit tired there. It's just crossed that trend line as well. Okay, and it's just touched that, and it looks. Let's look at whether or not prices could come under that green line and starts to have a fall and hopefully touch our TP level. Okay, you can always go to lower time frames and look at its progress from a shorter angle. Okay, all right, let's look at the pound, or would you guys like me to look at oil and gold straight away first, and then we go back to currency? Shall we do that? Some of you guys are waiting for oil. Okay, we could do that straight away, not a problem. Okay, give me a second. All right. Now on the oil, we obviously, as you can see, it has touched that level that we've predicted. The target has been reached, as you can see. Oil, as we talked about the other day, proven to be quite a good trade actually, because we were trading. I personally didn't trade gold for that week, but certainly some students, traders, and clients of mine have done so. So they have benefited a lot at this angle here, taking profit at that zone right there. So this marked by the, let's take that white line off, okay? We were looking at a formation looking like an M-like pattern. So the M-like pattern starts off from here. That's my X here, actually. My A point is right at the top here. That's my B, that's my C, and D somewhere here. And indeed, it touched and it reversed upwards. So the M-like pattern usually at the end of the pattern, which is at the D level, usually rises up. Okay, so M usually signals a bullish-like pattern, and it comes upwards. Now we usually trade from C to D, so that C to D has completed more or less very nicely and start to bounce upwards. Usually, if it does bounce upwards, we're looking at D here and E there. Okay, so a lot will be asking how much, will it still be going up or not from there on. I'll be taking profit around here from my D to E move. Okay, but usually we use the Fibonacci to mark from C to D to know where do you actually take you could always look at different angles, different Fibonacci levels, whether the 38.2, 50, or 61.8. But there are probably reasons from the Fibonacci side of things as well, and the geometric patterns of why it, have done that. Now, as you could see, sound. Can you guys hear me now? Yep, guys, could you? Yes, is it okay now? All right. I'm not sure. I think I probably pressed something. Okay. Sorry about that. Okay, I'm back. Sorry about that, guys. Okay, I'll be careful this time. Perhaps I've pressed the buttons here. Okay. All right. Okay, we're back. So we're still speaking about oil. Maybe you guys have missed out something, but we're looking at oil on a 4-hour chart, and uh, we're just looking at support resistant levels at the moment as well. I've mentioned that when we draw support resistance, it's probably best not to rely on one single line. A lot of people make that mistake. You know, they draw support resistance by marking a line there. Let's say, oh, prices went up, down, but the highest point I could see is that wick there, and I draw that, and that's my resistance level. And that's not supposed to be the way for you to do that. But I'm just going to demonstrate again for those who have lost me just now with my sound. So I would like to show you how you can draw just very briefly. Let's take that for example. We've got that area of resistance has concentrated in that area because you've got lots of candles just sort of uh, resist itself from going further up, and that's where prices fell, that at that sort of zone. So we want to look at resistance not just by drawing that high end. We want to always concentrate on the body. Okay, we want to look for the body. Want to look for the body right there. Okay, and why not here? Because if I were to draw it like this and concentrate on that one, what will happen is if I draw first on the body and then I draw on the top, I get a lot of bodies inside this range. I do not want bodies in the range area. If I put it right there, which I have the body and the wick right there, if it is just the wick going through that zone, it's okay, but not bodies, you see, unless at this area. What I meant is this area, because you're drawing it from this area. Beside it shouldn't have any candles inside that zone, only the wicks is okay. But then when we look back, you can then look at how big, only big candles are going through that zone. That means this is a significant support resistant area. Okay, that is for your resistant side of things. Okay, if you want to mark support, maybe you want to look at this area here because it's closer to the price now. Okay, let's mark a support now. Support, the same thing. Let's take that lower price there and start with the body. Okay, when I start with the body, okay, right, I go on to the tail. All right, and look at this area. No bodies were in this area close to where I've used which oh, did I lose you guys again in sound? Okay. Yes, it doesn't. It's okay because it's just looking, Zach. You're just looking at that. When you're looking at, let me clarify this. If you're looking at 1 hour chart, let's say, for example, you want one time frame up to draw your support resistance. So let's say I was looking at this oil chart from 1 hour. Okay, so hence the reason I need to go one time frame up to draw my support resistance. It doesn't matter because you're making your analysis based on the chart on a time frame that you've decided. Okay, so your analysis then will be based on where you've drawn your support resistance. Further analysis, especially with geometric patterns concerned, this is how we look at it. If we want to, I'll repeat what I've mentioned earlier. You've got two things that you would like to find out, the trend and some support resistance levels, correct? So if you were to look at 1 hour chart and you want to look at you want to know the support resistance, the support resistance levels are best to be made one time frame up from the chart that you're looking at. So if you're looking at 1 hour, one time frame up is 4 hours. So the 4 hours chart would be ideal for you to draw the support resistance lines or levels. Okay, but if you are looking for information regarding trend, then your trend would be best to be spotted at 2 time frame up from where you have started initially. Okay, so this is the best way to actually make your analysis from time frame to time frame. Okay, so if I was looking at 1 hour chart, I want to draw my support resistance line on my 4 hour, and I want to determine the trend on my daily, because my daily would be my 2 time frame up from my 1 hour. Then I go to my daily. That's where I look at my trend overall. So the trend, as you can see overall, is further down on the downside, because you're looking at further movement of candles away from these three lines. Okay. All right, I hope that's clear, guys. And I want to go back to the 4 hour, and you could see now. Look at this, guys. Yeah, I've drawn that these two lines here, marking it as a significant support. Okay, based on that candle there. Try looking back and look at whether or not in that zone it has actually bounced off, or it has acted as support resistance. Okay, as you can see, it has, and you've got support and resistance and long candles penetrating through. This is a good sign. That means you would need, if you've got long candles going through the support resistance zone that you've drawn, like that one there, whether it's a bullish candle or bearish candle, we want to look for longish candles that went through that support resistance zone. And you've got one right there, you've got there, and you've got many. You've got strong support right there, you've got some support there concentrated, and long candles all the way through. So what that means is you then have a quite significant support and resistance zone, because you will see it as a wall. This range is like a wall. So if you've got long candles penetrating through it, it shows you that it needs only long candles that could actually create that trend, or break through that wall. Okay. So that's basically how you do it. So we are expecting some movement there. And as you can see, you've got long candle coming down through that line, mainly as a mirror of what has happened in the past. You've got long candles going through there, going through, going through. Okay. So what we could get out of this is to look at whether or not it was more support at this zone or more resistant. It looks like it's got more resistant, but then this is good information, because even though you got more resistant in that zone, but it got stuck there, the 50, and previously got stuck at the 100, and bounced back down. So that shows that we've got lower highs going on here, and at significant level. So it is still on the downside for oil at the moment. Okay, hope that is clear. Any more questions about oil? People trading oil, I guess. Yeah. What is the success rate using geometric trading strategy? Very good question, Vitautas. From my trades using geometric pattern, and from the analysis of my students and followers, we have made the statistics. We could say anyway from 60% to 80% ratio, but again, it's got its own timing. Within a year, of course, you've got liquidity level, times, and volatility. So if it does fall, it could fall as low as 60% depending on the timing. That also gives you a signal of high risk time to trade, okay, including Christmas time, or you've got very low liquidity time and things like that. But basically, out of 10 trades, you have got 7, 8 right ones, okay, hopefully. But that has been what the performance are so far. But again, there are rules to it, okay. So we've got yes, I mentioned risk reward 1-to-1. You are right. That's correct. So you've got aiming at 80 pips, then your equivalent number of pips for your risk as well. Okay, but it does depend on the M pattern and W pattern, which leg you are trading. The C to D and the D to E, for example, will give you an average minimum pips, number of pips of 50 to 80. Okay, and you could calculate that depending on how high the probability is for each pair. No, I'm not. I'm a very manual. Back to basic kind of trader. So due to my approach in teaching, I don't actually have EAs or put it in technical, but I will be posting my trades and using a real account very soon via what do you call MQL5 MetaTrader 4. So in that way you could monitor trading account, but I have no interest really to have it automated or things like that, since I have been approached many times by very big companies with programmers doing that, but I prefer to have it entirely manual. Okay. Do you always not all the time actually? That's a good question, Vitalis. I don't always stick to that. If the probability is high, I would increase the profit ratio higher to 1 to 2 or something like that. Yes. Geometric. I'm in the process of having a count that would be, as mentioned, MQL5. So definitely, that would be best for students. But this is purely educational purposes, but on a live market, you could see it. Hence the reason I also leave my patterns on the chart so you could see it then, from time to time, how did it materialize? And I like doing that myself of leaving the pattern on and, you know, proceed to detecting more patterns, and in that way, if something don't work or have not reached my TP level and all that, I can go back to it and look at it and recalculate, to look at the ratios or what made it, to go against me. Was it the fundamental side of things, or were there hints earlier that I've missed and things like that? Okay, that's the oil side of it. Sometimes in big patterns like that, if I were to zoom out, zoom in, sorry, and big patterns like that, inside the big pattern, you could also look at smaller ABCD patterns and all that, just playing in within that big pattern. Okay, so that this is a very common scenario where you find big patterns inside the big patterns. You could trade the smaller patterns, and you can find these smaller patterns on the shorter time frame. So that's why the geometric pattern or harmonic pattern analysis, they're all applicable on various time frames for various instruments. Okay, so what are we looking at next? Let's look at gold first. Maybe this is one of the, to be honest, trade that didn't really go my way. It's one of the 10 trades. This could be the second trade that failed out of 10 trades. So won 8 trades but lost 2 trades, let's say. I think that was close to what I have experienced or went through last 2 weeks ago when I was trading this as well, a week and a half ago. And because you've got a W pattern, W is always forecasted for it to go downwards at the D point, but you see it went from X to A, okay, then A and then B, and didn't reach D at all, and just turn around there. Okay, so I may have how do you call that, overlooked some risk side of things, maybe missed out a pattern that was stronger in that sense, or maybe more significantly, the resistant level. Maybe it is highly resistant in this area. We've got support there, okay, but the resistant area may have been something of missed out or maybe not looked back. But these are analysis that I do, and I do post analysis after that to look at where it went wrong, or there's always reasons for it, but also most importantly, hints on how to avoid them are also there. Okay, most of the time, because we're looking at that angle there itself, posted a lot of risk. But again, with that, there were some patterns there as well. Let's look at this one. This is quite an interesting one for gold, because I think I did mention about price as well. I did mention to you last week on being careful with where the resistance could potentially be if it headed downwards, because we went on to daily chart as well, and we have noticed, and I remember me mentioning how it could pose as a risk for the upward move, because it may have limited move upwards, may not be a total change of trend, but could potentially be a what do you call a correction. Okay, so even at that time, we've got all the candles trading further, or further than these three lines as well. Okay, so definitely we've got some potential now to look at alternative patterns as well. Okay, if I were to move that one, let me move that one there. Okay, we've got an A, B, C, D potentially as well. I'll just draw it first so you could see what I'm doing. All right. Okay. All right. Now you've got an AB sort of ABCD sort of pattern. So we've got A maintains itself there. B, okay. It's not X anymore though, because this is a ABCD pattern. Only the M and W pattern that we begin with X. Okay. So we got A shouldn't be here. A should start. Okay, some of you may be wondering already. So you got A there and your B down there. Okay, then you've got your C right up there, and this is the area that we were forecasting D to be. Okay, so you got A, B, C, D, for example. Now, if A, B were to be equal to C, D, then that is exactly where price have actually landed more or less. Yeah, as you can see, look at that level there. Okay, so that's your ABCD trade if you're looking at it earlier. Okay, but it has sort of, even though, let's move out that these horizontal lines first. Okay, right, now we're expecting D to be here, right? So if I were to move that there a bit, the end of the CD leg, mark it as my potential TP level. As you can see, it's quite close. AB equals CD. Okay, and what else can we look at the moment? Is the entry. Where would I have entered if I were to trade ABCD pattern? Is to drag the A to D, okay, and look for the center point. So that center point right there would be my ideal selling price when I was trading from C to D. Enter there, and I could take that as my TP level, but of course got to adjust that in accordance to the psychological level as well, psychological numbers. Okay, so we've got your entry level there. Let's move this one somewhere up here so that I could use that horizontal line again. Now, remember I've told you you've got first way of predicting the D is AB equals CD. That's one option. Second option is for you to look at where C has landed onto the Fibonacci. On which Fibonacci level? Okay, brilliant. You see the C, it's really close between the 61.8 and 70.7. Okay, so if it's 61.8, then you're looking at 1.618 as your target. Okay, so that's 141, which is on the dot, and it is 70.7. That means um, it relied on 70.7 Fibonacci ratio, because what I mean by that is if your C point, okay, is 70.7% Fibonacci, that means your C point is 70.7% Fibonacci of A to B, okay? Then your D could potentially be 1.41, and it seemed to be on the dot at the moment. So of course we adjust at the psychological level and take that. So I'll just write that onto my chart. So that has also happened as well, but as you can see, it's been happening quite a lot on the downside for the daily chart. Perhaps you want to look at other examples as well. Okay, so I've covered the oil, the gold. Okay, now let's look at how. Let me see whether I've got other patterns that we're looking at the moment. A second. Okay. Sometimes, at the time of analysis, I may not see anything, but time of having you guys with me and we have this webinar together, and suddenly there are some patterns or formation that just pop up, you know. So it does happen sometimes. We've got strength on the bears, but upon curiosity, if I was to pull that all the way down, if that were to be my A, that's my B. So my C is there. My C goes on the dot of 78.6. You see, what does that mean? Now, 78.6, meaning that if your C were to be 78.6%, okay, then your D could potentially be at the 1.272% extension level. Okay, let me write that down. So there you go. That's important. So look at where your C has ended, on which Fibonacci level, and that should give you some kind of formula of where D could go. But of course, you got many ways, and that will all be covered in the geometric trading session or series, okay, coming very soon. Get the announcements via our website as well. Okay, and all right, we've covered the gold, a bit of oil. Any more opportunities that you guys have spotted, would like to have that confirmation using geometric trading, or you want to just look at geometric trading analysis? I think Tautus, so someone have mentioned about DGIA as well. Let's look at what's going on here. Seem to be a big M-like pattern, but to come down all the way here, a bit of an expectation of that. But at the moment, we find that some resistance here could be in that area there. It's a bit on a slow back burner on that one there. So if I simply go on like that, I would like to show you the result for oil, for the DGIA, sorry. There was a pattern that I've spotted, which was the Z pattern, if you guys could remember. And it goes like this, called a lazy Z pattern or something like that. And then that level there is your AB. So AB equals CD, okay? It was expected to be there, but I'll tell you why it ended up just there. There may be a reason for it. Okay, put it like that. All right. You see that short leg area? If I was to pull the Fibonacci, you will see that long move ended at 200, could end at 127.2 or 161.8. Okay, but you want it landing on these Fibonacci ratios and not more than 2 to 4. And because once you pull that Fibonacci from there to here, you want to know that long body has landed where at which level, so that you know that there could be a potential trade just by looking at it not going above that 200. As you can see, loads of resistance there, loads of resistance. Okay, all right. So was a pattern detected? Was a lazy Z pattern like that? Okay. Oh wait, that needs to be. Always draw the lazy Z pattern based on AB equals CD like this. Okay, right? So I'll just connect it first. So we've got like an envelope-like pattern here. I was thinking of naming an envelope-like pattern because I see a lot of them all the time. I'm doing the analysis here on the charts. Okay, so usually if it's lazy Z, one of the rules is that it's got a body here. I mean, it's got more candles here, and then it makes a rise and come down. That gives it its name of a lazy Z. You got the Z starting from here, here, and then up. So, and it's always expected once it goes down, up, and down, it at the end somewhere would actually reflect an upward move like this. Okay, so if I and let me think. We got Z. So usually the end area of where it ends, it should be about 50%. That would then mean it is quite an ideal pattern to trade if it teaches reaches Fibonacci ratios. Usually it goes under 5, but something push it a bit higher. So it's not complying with my style of trading or geometric pattern. So I just simply leave it. It poses some risk if things are not going in sync with what you see. So that take it as an indicator that you should leave out the trade first. Without factoring the risk level, of course, but there may be reasons to it of the formation of the chart. Now, apart from this envelope-like pattern for the DGIA, I've also detected a M-like pattern here. Of course, the same, sorry. And there you go. Okay. Let me just finish that. Okay. All right. I hope you guys could see, and I hope it's clear for you guys. Because we've got another M, we've got an M-like pattern here, you see. So an envelope-like pattern has actually merged with an M-like pattern, and I think I've got questions. Okay. If it were on the 50 Fibonacci, will the projection be to the upside for the Dow? Ooh, let me look at that. I'll just explain, Vital. It's for the DGIA. No, it doesn't actually work that way. It depends on what pattern you spot. For in this case, it's got an upward move expected, but not until it reaches down here. So if this were to be my C, I'm expecting prices to come to that level there and correct itself from this area upwards. Okay, but how much far, it depends on Fibonacci. Try out one at a time, one level at a time, 38.2 first, and then you take your TP at your 50% and things like that. So this is the M that, let me make perhaps a different color. Okay, so it will be clearer for us to know that you've got two patterns that are sort of merged. Okay, see. Okay, Give me a second. I know there are some waiting for some answers to the questions. Just give me a second. I'll be right there with you. Sounds like a song. Okay, here we go. All right. Can I explain? Yes, I can, of course, Vitautus. The lazy Z pattern. Let me draw that out for you a bit, so it'll get a bit clearer in this pattern. Okay. I'll draw it somewhere here. Um, let's say you've got a long body like this. That means that's this move here. Okay. Because it's on a upward move. Okay. The lazy Z should look something like that. Let's say. Okay. One second. The lazy Z pattern. Oh, don't know what happened there. Okay, never mind. All right, there we go. Give me a second. All right, let's say this is how the lazy Z pattern looks like. Okay, so we start with A here, B here, C, and then D. And it's usually expected for the distance between AB to be similar in length with CD. Okay, and you've got an upward move and then a down. Usually at the end of the D, we're looking at a projection upwards after a bullish lazy Z pattern. A bullish lazy Z pattern has a longer body pointing upwards. A bearish lazy Z pattern would be longer body, okay, pointing upwards, pointing downwards, sorry, for the bearish. So that's bearish. It is in accordance to the longer body that we are projecting based on the longer body as well, okay, of where it would go or end up after the pattern has completed. So this one, the longer body is downwards. So after this lazy Z pattern complete, we're expecting for another fall here, okay. But usually the D, high probability lazy Z pattern, the last move or the last leg should end at the 50% Fibonacci of A to B. So I click on this is my A. This is my A, B, correct? So pulling the B to the C, I would like to look at where it has ended. If that pattern has gone up and ended at 50, I've got a higher chance once it's starting to reverse for this move to be traded by me. Okay? So I hope that's clear, my Tautus. Is that okay? I've done my tweaking to the pattern as well, but you can literally type lazy Z pattern onto Google and they are there. But it's just the way I approach it may be different using the Fibonacci or things like that. Okay. Okay, brilliant, Vitautus. Thank you very much for that. Okay, so we've covered some and completion pattern. I don't actually trade the Elliott wave, but you're talking about the. I'm not an Elliottian, Vitautus, but I can only explain to you the M and W pattern. I think you meant, yeah. That's the M pattern right there. So I'm expecting the DGIA to fall a bit more, following that C to D, because this is my X here, A, B, C, D. So C to D is expected to fall. Okay, but again, I would like to look at prices, factoring, and a couple of others. So M pattern and W pattern. You've got M pattern, let's say, moves like that. Okay, all right. That's your M pattern there already here, the big one, yeah? Oh, let me just check. Ah, okay, you have, all right. Usually the M pattern, it depends on the Fibonacci. If you really look at it carefully, the M pattern is made up of an A, B, C, D move right after a big move. You've got a big move and then you've got an A, B, C, D pattern. That is basically just what an M or W pattern um, is made of. Okay, like for example, I've got a big move here, blue line here, and then an A, B, C, D move. Okay, having A, B equals to C, D as one of your option, followed by the other options based on Fibonacci levels, the retracements, and the extensions. Okay, it's a very unorthodox way of trading, especially with me not wanting to use any EAs and things like that. But I personally, it's a personal choice because I have to comply to using or not be tempted using any too many indicators or using EAs and all that because when I'm teaching or I'm conducting live workshops on a live market and sitting with my students or those participants who have no experience in any other strategy and having this a first one, it's probably best for me to show them ways on analyzing market manually as opposed to you know having them rely on signals by an EA and things like that. Is best for them to be closer to the market by doing it themselves, knowing how it's done. So the drawing part is just to add up a bit of some element of art onto the fibs and things like that. Fibonacci. Okay. Okay. We've covered that a little bit on, let's see, Euro JPY perhaps. Okay. It would probably mirror the other euro moves or pound move like the GBP JPY and things like that. You could always type in correlations, forex correlations as well, and find that on Google and look at the pairs are connected to which pair. And then let's say for Euro JPY, you've got close to 7 pairs that are highly correlated with the Euro JPY. So let's say you've some are positively correlated, some are negatively correlated. Okay, so it needs to, be be cross-checked as well, meaning that you're looking at patterns in within that basket of currencies that correlates to one another. Okay. All right, guys. Have I got any questions from you guys? If you guys have got anything you're not sure about or you would like me to look at something. This is a nice example on AUD USD. Any one of you here are trading at the moment on the AUD USD by any chance? It's a nice example on the ABCD pattern and also looking at how prices have moved. I'll just quickly draw this pattern here. As you can see, you've got prices from that angle there, let's say, going up, coming down, bounce off very close to the 200 moving average and up. So up and away, how far more could it go, right? That could be the question. Now, let's say I'm taking that angle as my A angle. That's my B, C, and D. Then that could just draw out the formation of ABCDs. But what I would like to do first is to get the A dragged, the Fibonacci to be dragged from A point right up to B. And I would like to look at where have C bounced off closest to, and it did bounce off closest to the 50 moving average. Okay, so how do we now predict or make a forecast on the D, on how far D could potentially go to? Okay, but before anything else, let's just draw the first leg, let's say A to B, right? And then B to C, but my AB could potentially be equal to CD in length. Okay, so that's my first potential TP level if it were to rise up and away. We can only monitor that for this couple of days and see whether or not it has done that move. Okay, right there. So that's where I've marked that to be a potential D point. But remember, the C was about 50%. Okay, so 50% means the D should be around 2.00. Okay, so I'll break B to C and I look for 2.00, which is right here. Very close. Well, not very, but reasonably close to where we have marked the first line. So these two horizontal lines are your potential zone of TP level if prices were to persist higher. Okay, all right. I'll be providing more information, Zach. Don't you worry. I'm also having the geometric course starting in January. You'll be notified of the dates. If I'm not mistaken, tentatively the geometric pattern scientific series will focus a lot on geometric pattern. Of course, it'll start, if I'm not mistaken, from the 7th. Oh, no, I'm looking at December. We're talking about January 2016. It will be the first one will be on the 4th of January, and then 11th of January, the second one. The third one will be the 18th of January, and then the final one, 25th of January. It's only after the last one and you have attended all four that you would get the certificate as well. So that is on the tutorial side. On the materials, Zach, I am in the midst of producing more materials on geometric trading from scratch, of course, but it's in progress, like a guidebook and different parts as well. And yes, I am working on it definitely. This one, Zach, you've asked the second question of whether I count only the second higher one. I think it's the lower one that I would consider TP on, but it needs to be adjusted with the psychological level or psychology number as well before you get a nice price to exit as well. From 50 FIP, yes, extension is 200, correct. Yep, exactly that. I may have a table that once it's available to be sent to you to give you a better idea on 50%, the Fibonacci ratio and the extension. Your extension is let's put it this way very simply, your Fibonacci retracement that you have spotted on C will give you an idea of where the D could go. So the D is equals to the extension as well. Yeah, I guess you guys know that already. Yes, you will be sent an email. Do check the orbex.com website as well, and we've got Orbex. I'll just type that out, orbex.com. Okay, and you can always scroll downwards and you've got a section that announces the upcoming webinars to you, and you will have links to register for that. Also do check out how do you call that, the Orbex blog as well. Just type Orbex blog and you can get ideas on webinars and trainings that we do. Okay, so not to worry. I mean, you've attended this one, and you will be sent out the future dates, sorry, registration landing pages for the upcoming scientific FX trading series for geometric trading. So we will have a link there. All of you will be sent an email to for the link for you to register onto the upcoming series. Okay, I'll be covering more in detail because we'll be talking specifically about geometric trading, and that's on the technical side. Then once you guys have finished the series of FX training and you would like a trade plan incorporating geometric trading and having the fundamental side of it and geopolitical side, that would be the mentorship program series as well. So that would be another very interesting one, which should be the following month. That will be in February. So at least you've got a series of education and certification for you to aim for. Okay. Yes. Just wait for the emails and definitely be sent to you and you guys can register. Okay. Be happy to have you guys join me on that series of training. Okay. Any other questions, guys? Anything that you would like me to cover? If not, then we would close the session today on that, and we'll see you on the fourth, not the fourth, sorry, on the next one soon, as soon as I come back from Malaysia. I'll be due the next week or so. So after next week, I'll be able to continue once a week on live geometric analysis. Okay. All right. Okay, I'll just wait for some questions. If no questions, then I will be saying good night, good evening to the rest of you, and see you again the next analysis session. Okay, perhaps some of you would like to see the prizes there. That's the zone there, yeah, 7382, 7396. I wouldn't just grab that TP at that on the dot. Remember the psychology levels. I would look at TP, take profit level, below the 0.7382 level, meaning 10 pips below the 80 psychological number, which gives me 70. So the ideal take profit level would be 0.7370, okay, before it reaches the 80. So that would be my TP level. But what about the entry level of where we could do that buy for the Australian dollar? Best is when we combine A to D and look at the center point right there. Okay, perhaps right there. That would be showing 7226. Okay, to make it even more ideal, perhaps 10 pips after the 20 psychological number, so it should be 30. So 0.7230 would be an ideal entry point with your TP level at 0.7370. Okay, all right, I've got some questions here. Okay, give me a second. Thank you guys, thank you. All right. Okay, so thank you for coming. Have a very good evening. We'll see you again next week. And happy trading, happy pipping, we call it. Thank you very much. Take care, guys. See you again.